Boom. Jesse Abshire with Abshire Financial. How are you, buddy?
I'm doing well, Mike. How are you?
I'm doing really well, really well. Very blessed, my friend. Let me ask you just one question. What do you do?
What do I do? Only one question on the podcast today?
That's
That's
it.
it? I can manage that. All right. Well, what do I do? A lot of things. But in general, I'm the founder and CEO of Abshire Family Financial, right? We're a veteran-owned full-service financial firm, right? Based kind of here in Reno. But we operate in 16 other states, coast to coast. I kind of built this as a thought of kind of a under one roof approach. So it's, retirement planning, tax strategy, wealth preservation, estate planning, Medicare now. So, try to make it easy for people. And I like to say that we're not your grandfather's financial firm. We mix in modern strategies with time-tested planning and all kinds of good stuff for families, business owners, and, savvy entrepreneurs.
Yeah, yeah, and I think that's a space that needs some filling, which is people tend to focus on building a business, which is scary. Going out on their own. Real estate agents are all independent agents. They may work for a brokerage, but nobody ever teaches them how to generate leads, how to run the business side of it, the financial side. And if they are successful in any endeavor, there's really not a whole lot of resources for what to do with the money and how to avoid paying taxes on money, how to
Hmm.
keep yourself protected. In my industry, a lot of real estate agents have clients that own multiple properties. Um, we have a lot of clients that have acquired properties over long periods of time. Uh, a lot of us that have been doing it for a while have dealt with a passing of a client and then what happens to those homes, things like that. So you're a resource for people that have access to or make money. And then you turn around and say, hey, look, let's make sure that you're set up so that the money is being taken care of efficiently
100%.
and
I
and
mean, I
and
think I think
you're protected.
b- business owners forget sometimes because they get so hung up in like, I need to build my business, I need to make money, and they forget that their other business partner is the IRS unless they plan to cut them out.
Very well, very well said. Yes. My business partner has had years where they did better than I did.
Oh, I bet they did. Yeah, I bet they did. I have a radio show here on KKFT every Saturday at 3 p.m. And we always make the joke about tax procrastination and the IRS being your silent partner.
That's
So that
true. And
it's a
yeah, and
hot
they share
topic. Yeah.
they share the same that partner has the same board meeting day as my birthday, which is April 15th, right?
Right. I mean, it's like a lot of people, they build these things, they build wealth, they acquire properties, they build a business, or they work for somebody else, which is, fine too.
Totally fine.
But most people don't realize that, the biggest risk to their retirement isn't the stock market, it's the IRS, because that's one thing that, as we know, um, there's the administration can change those rules pretty much whenever they want.
Oh, yes. Yes. And not always for our own good.
But let's be real. When was the last time that was made? Those changes benefited us.
Right.
Probably,
Yeah.
probably not recently, right?
No.
Um, so I know you had some kind of things that you wanted to chat about today. What else is on your mind?
Well, I want to know what specific strategies could an entrepreneur employ, or let's say 3 to 5 things that they may not even be aware of. If they own a home or they own multiple homes, they have above $100,000 worth of income. Something, maybe some tax deferral strategies, maybe asset preservation, maybe talking about retirement planning, things like that. What are hot topics in your industry?
Okay, well let's do a few, right? We'll talk about the client moving into retirement, which would be like kind of a preservation. Let's turn what I've done into income. And then let's do like some tax strategy in general, right? So most entrepreneurs, they overpay in taxes and they don't even know it straight away, right? The CPA, they file your taxes, and some of them work for you, some of them work for the IRS. It's good to kind of differentiate which one that is. Um, and we help kind of plan for that too, right? Quarter by quarter, years in advance. Some tools like entrepreneurs have, right? If you have any type of incorporated asset, that could be, right, LLC, S Corp, C Corp, a formed legal entity, right? You can use tools like defined benefit plans to drop taxes,
Yeah.
right? You can use Roth IRA strategies. You can use certain types of entity structuring to reduce your lifetime tax burden, right? If your estate gets too big, right, then we can start looking at foundational building, uh, right, like 503c stuff like that. So, um, go on.
What was
I'm going
the
to ramble.
no, I love it, but you said defined benefits, and I'm familiar with it. I get it. But somebody listening may not understand what a defined benefits package is.
Yeah. Okay. So let's say if we're trying to lower our, if we work for somebody else, right? If they have more than 10 employees, especially in the state of Nevada, you have to have a 401k plan, right? So a 401k plan is managed by what's called a TPA, or a third party administrator. According to ERISA laws, they have 3 to 5 options that they can choose from inside of this plan. Now, a defined benefit plan is a fancy way of saying the same thing, but for a business owner. The difference is that it's pretty much going into some type of fixed return. The common one here would be like a money market account. If you're trying to lower your tax bracket, let's say somebody's in the 24% tax bracket and they're trying to get to the 22% bracket is 80 grand.
Okay.
They could take this 80,000 and they could put it into this SEP IRA, for example, or they could just put it into this defined benefit where they're continuing to defer the tax, but they still get a return on this money, and that now lowers their taxable income for that year.
Right. Right. And it would be through like a profit sharing, something like that.
Doesn't necessarily have to be a profit share. The business owner can set that up with whoever their financial service professional is. Um, they would set that up. That would be also considered an asset under management, so that would be included in like their advisory fee.
Yeah.
That would just be another asset that professional is managing. I really like those when you have clients and business owners who are trying to decrease their tax burden,
Right.
right? And that's like a front end kind of calculation, right? Where I can kick the tax can down the road. The important thing here to understand for me is we are kicking that to kind of like an unknown territory.
Correct.
So that's our risk, right? As long as we understand that our legislative risk in this scenario is we are kicking the tax can down the road, and we need to make sure that we are constantly planning for that scenario.
Right. Because at some point in time, the idea is you don't pass away, but you actually have access to those monies.
100%.
Yeah.
100%. So now we can shift into the next stage of that. Let's say same client, had a business for 30 years ish, right? Deferred money, funded executive bonus plans. And they're like, okay, hey, now what do I do? Right? I've accumulated money. How do I make it pay me?
Yes.
So there's some things that you can do inside of fixed assets where obviously we would like that money to be tax free. We can all agree
Correct.
that we would like to not pay taxes.
Yes. We all just
Um,
voted yes. We wanted it to be.
yeah, yeah. I'm pretty sure nobody's ever going to say no, right? Um, but there's companies out there that will actually open their balance sheet and share in that cost with you. So if you're doing Roth conversions inside of a fixed asset, they're going to even cut a check up front to help offset that tax bill for you. And then now we can do systematic Roth conversions, and we're not really out of pocket for like years to come, and the money's still growing.
Yeah.
Yeah. So that, that's one way where we take the risk off the asset, right?
So the goal would be during the working years to put as much aside and then also have a vehicle so that you can, because what happens is you sell the company, you shut the company down, and that cash flow that had been maintaining your lifestyle, it dwindles or goes away, and it's being replaced by the monies that you've set aside.
Yeah, I agree. The only thing I would add to that would say, as you're accumulating, we're also creating different types of strategies inside of that accumulation. For example, like deferred tax to lower now, tax advantage strategies, and other accounts that can grow tax free, right? So we're not just deferring everything, and then after 30 years, we have a huge tax problem. That doesn't really help us.
Right.
We're just
Yeah.
replacing one thing for another at that point.
Yeah. Yeah. You're delaying the pain.
And 100%. And I like to say to my business owners that your business in itself cannot be your retirement. And I say that because, like we help entrepreneurs build parallel wealth through like tax-free vehicles and passive income streams through other things that maybe their business offered. Who knows what that is, right? It depends on the business. We can also implement certain types of estate planning so they're not dependent on a future exit to be okay.
Right. Yeah, because sometimes, especially if you're in an industry that isn't going to be around in 5 years, but you have no idea that it's not going to be around, and your goal had been, well, I'm just going to sell the business, and in 5 years, the value of that business is zero. Basically, you might have assets that you can sell, but that big paycheck's no longer there. So you provide backup for it. What are ways to provide annuities or constant cash flows at that final stage?
Yeah. So when I talk about annuities, I think it's important. I'm going to nerd out just for a second, but
Somebody
I,
will love it.
I think it's important to understand that risk is actually in three places when it comes to financial planning. So, one, if the risk is on the asset, like on the money, that's the easy example is equity stock, right? You own common stock, preferred stock. The risk is there, right? On the money.
Sure. Yeah.
If the business crashes, the money does too, right? That's the risk. The second part of that is risk is then on liquidity, right? So if I'm going into some type of guaranteed income structure, like a fixed indexed annuity, where I could get lifetime income, my risk there is I only have access to a certain percentage of the money because they're guaranteeing it and paying me. So my risk there is on liquidity, right? The third place risk would be on is returns. So it's 100% liquid, but I have no return. The best example there would be like a high yield savings account, a checking, or a basic savings. Very liquid, no return, right? So as someone moves into that, that's why it's important to have these different asset classes. So we can say, okay, hey, here we're not liquid, but we're getting income that covers our essentials. Here we're very liquid, equity stock, savings, emergency fund, etc. Right? Yep.
Yep. Yeah. Well, so you help people manage risk.
I would like to hope so. Yeah. I like manage, but also understand. Like part of what I do, I feel like is like an educator, where it's like I want someone to come in and be like, look, this is where all of our kind of like problems are. And this is how I'd like to solve them. And here's the pros and cons of that solution.
Yeah.
Right. Because we actually get a lot of referrals from clients that were corporate clients before they came to us. And they were like, we learned more from Jesse and his team in a couple hours than we learned from this person in 5 years.
Right.
And, I can't speak to that, but I know what we do. And our goal is if somebody comes in and we're going to earn their business, I want them to at least know what we're doing and why.
Well, and I think education of and discovery of risk tolerance varies by individual. Maybe age plays into it, income level, fear, those types
Yeah.
of things. But I mean, there are people that are like, hey, look, I want the riskiest, highest return possible, right? There's some of us that are gamblers, and then there are people that, and I met a guy last week. He says, look, I've got $250,000 at 4 different credit unions because those accounts are federally insured, and I get 4.5% return. He's been working for the state for 30 years, and I just looked at him and I said, "Wow, you and I could not be more different." Um, I I'm sitting here going through the S&P 500 return over the last 2 years and calculating, and I'm like, "Yo, you," but he's willing to forego the opportunity of that growth in return for the safety and security that knowing that what he has built is pretty much bulletproof.
And if that client came to me, I would say, okay, you like safety, right? Well, did you know that most states, especially continental United States, also offer the same level of a surety bond for an annuity up to $250,000 per contract?
And he would say, "No, I have no idea."
But I mean, like, most people don't know that, right? So if
Yeah,
I'm getting
exactly.
4%, if I'm getting 4% in a CD or a certificate of depreciation,
Yeah, I see what you did there.
oh, you like that? Um, and I'm like, okay, so you like safety and a guarantee. Well, I can do the absolute exact same thing and get north of 7% in a fixed guarantee. And maybe we only do that in a couple accounts, and then maybe the others we index into the S&P 500, S&P 500 futures market, or like the PIMCO index traded on the stock exchange. And we still have the guarantee on every contract. So he gets the same thing, and now he could triple his returns without more risk. He
Yeah,
just loses a
exactly.
little liquidity.
Well, and I think that's probably the biggest pitfall is that there's not a whole lot of financial uh, mentorship out there, and we don't teach it in school. We we teach our kids to be worker bees and go and trade 40 hours of their life to
Mm,
generate income and pay the government a certain amount of money, where I think the more I learn about financial literacy, the more I realize that you're best served spending your time doing the things that generate the most income, and then deploying that income into other assets that also benefit the economy, because the government taking $50,000 from me when I could use that money to pay for another employee, adding another employee that brings in that money, runs a household, goes to the store, buys the pizza, takes the kids
mm,
to the movies. That's the perpetual game, but we don't teach that.
yeah. Now, all right, we're gonna rabbit hole just for a second.
Just a second. All right, this will be quick
Why don't you think we teach that? Honestly.
because I think it's all a trap. It's a game. It's a system that was created to create worker bees, because we're slaves to the industry. We're more easily controlled if we don't understand
Hmm.
how the game really works.
Yeah, there was a federal judge years ago. His name like escapes me at the moment because obviously we're recording something live. Um, but he said there's two tax codes in the United States. One of them for the informed and one of them for the uninformed, and both of them are legal.
Yes, I love that.
And to me, that highlights what you just said, where it was like, hey, as a business owner, I could pay $50,000 to the IRS that who knows how that will be appropriated, or I could potentially provide an opportunity for somebody else,
Yeah.
right? Um, I'm a huge fan of that. Have you ever read Buy Back Your Time by Dan Martell?
Martell, yeah. Yeah.
So like that's kind of the epitome of what you're saying, right? Where it's like, one, are there jobs that I hate doing that I could
Yes.
that I could potentially, hire for less than I make an hour, and then I could provide an opportunity for somebody else. That's like one of the chapters in his book.
Yeah, he's got a really good graph too that
Yeah.
basically says take everything that you do in your business and your life, and let's start with the things that could be replaced the cheapest, and let's put people in there that do those things. And then as we move up, and I'm not going to quote the graph, the chart, but it makes total sense. And it is basically if you work 8 hours, and this is more on the entrepreneurial sales side of it. If you work 8 hours and your most impactful, like your dark green time is spent with clients, your calendar should be all client meetings. That's
Hmm.
all you should be doing. All of the follow up, all of the promises made can be delegated and assigned to other people. This is what we teach in coaching, which is if you make $250,000 a year, you should not be doing things that somebody would get paid $20 an hour to, because it frees up more of your time to go make more money. And the idea is you have a team, I have a team, and there are things that my best use of time is not sitting in my email.
Right.
It just isn't.
And I hate it.
Well, and yeah, exactly. Um, talk about a rabbit hole. The
Oh,
best use of my time is not to drive out to a listing I put on the market that's 45 minutes away to put a sign in the yard and then drive 45 minutes back in. But I have people on the team that they've got 6 hours worth of work. I keep them flex time a little bit so that they can go do those things for me. It provides income for them. It supports their families. And I think that a lot of entrepreneurs really like the fact that, yes, I'm being more productive. Yes, I'm making more money, but I'm also impactful to the team members. I get to help them. I get financial literacy, teaching people about money, how money really works, has become an integral part of what it is to be on my team. Because
mm,
if you're going to spend time with me and you're going to help me build my business, I want to give back to you, and I want you to be financially secure. I want you to have
mhm.
3 to 6 months worth of living expenses on the side. We go back to the Dave Ramsey stuff, which is very basic. And Dave Ramsey didn't build a $400 million convention center, uh, cash, because he kept he he kept his credit cards paid off. He implemented the basics, which gave him more money. He leveraged, had more people. Going back to Dan Martell's book, he bought back his time, had other people do things that needed to be done. They were better at it. My marketing person is way better at marketing than I am.
Oh, yep, 100%.
My listing coordinator is way better at filling out forms and inputting data than I am. My photographer takes great photos. I'm not really good at it. So once you do these things and you're successful, that's where it all stops. You have to go find people, and that's kind of where you come into this. Is I believe that financial planners, people that are FSPs, people that understand the game, they fill that role. And
No, I agree. Yeah, I agree.
it's let me ask you this question. What would be, for an entrepreneur that were listening to this and found some of it entertaining or educational, what would be one or two, maybe three pieces of advice that you would give to them that they could implement within the next few days, that you say, hey, if you've been successful, you need to do this. The establishment of an entity, you touched on that earlier. That was really big for me. I had no idea. I was a sole proprietor for the longest of times,
Mm,
until somebody said, wait a second, you realize the opportunity you're missing?
yep.
Not just you're leaving yourself vulnerable, right?
Yeah,
So
you're 100% at risk.
there's a threat. Like,
Yeah, yeah.
you have stuff. Would you like to lose it? Because this is the easiest way. But if you could give anybody listening or watching, a couple, maybe three tactics that they could implement right now that would be needle movers for them.
Okay, so let's start real basic first, right? Because I think that's the easiest one. So, as a business owner, you, I do not recommend being a sole proprietor at all. You're just like Mike said, you're losing so many things, and you take 100% of the risk, right? I mean, it's a couple $100 to form an LLC, whatever state you're in. I think Nevada is actually probably one of the most expensive state. It's like $800, but you know
Ooh,
what? That becomes a tax deduction.
right.
So I'm just saying, right? And then you can set up business accounts. You can separate assets where your business gets paid, and then your business can pay you. Your business can create, retirement plans funded that are tax deductible from the business. You get a lot more tools at your disposal, and our tax code in general in this country is built for business owners.
Correct. Okay. So form
One,
an entity.
form an entity and like understand the pros and cons of the different types of entities, right? So like here's a simple little, like, we're going to call this a nugget for this topic one. Form an LLC, get the benefits of limited liability, right? Limited liability corporation. And within 6 months, you send a letter to the IRS that's on the website that you can download that says, "Hey, I would like my LLC to be taxed as an S corp." And as long as you don't have a lot of employees, you just took 14% self-employment tax off the top.
Boom.
Still get
Money
limited
back.
liability and save money right now. Okay?
Love it.
So
Okay.
that's the first part. Second part is actually understand your business. Like, we have cash that comes in, cash that comes out. We have, overall kind of costs associated with those. And if I ask a business owner like what their net revenue is and they look like a deer in the headlights, we got more
Yes.
questions about to come, right?
I love I love that, man. That's the basics of when we coach, we say, let's pull out your P&L. And half of
Yeah.
them go, what's a P&L? And I go,
Yeah.
well, what do you bring in? What do you spend on a monthly basis? If you're going through a downturn and your revenue drops, you look at your expenses. I mean, obviously you do things to pop the revenue back up, but if you don't know what you're spending, and a lot of real estate agents will tell you how much they made last year. And I use air quotes because what they're doing is they're using they're using their gross commission. They're
Of
saying,
course
well,
they are, because it's a bigger
I made
number.
this much. Yes. Oh, it looks great, on paper. But you start digging in, you find out that, hey, your profit margin's 3%. Like, you're losing money in this. This is ridiculous. So know your numbers. That's what you're
Know
telling me.
know your numbers, because that's the only way you can truly understand what is going on in your business and what parts, like, for example, let's use a restaurant, for example, right? Or like a coffee shop. And you look at your menu items through like your sales system, and you say, wow, I don't sell this very much, it's kind of expensive to buy, I'm going to take it out, right? And then I'm going to concentrate more on things that make money, and then I can look at adding other things later. But the goal is to sell things that people buy, and to sell them at a way that you can make money every time they're sold.
Yes.
So if you reverse that and put that on like a realtor or like a licensed real estate professional, and it's like, okay, how much is your time worth and how much are you getting in return for that time? Same thing.
Audit. Yes,
Yep.
yes,
Yep.
audit. Love that. Okay, so and the easiest way for a business owner that maybe doesn't understand financials, doesn't they can keep a checkbook. Um, I just say, software like QuickBooks, just
Yeah.
a basic accounting software.
I think that's an easy one. And basic QuickBooks is free. Um, I'm looking in a system real quick because I have like a series of stuff that I also give out. Um,
Yeah,
but there's so many good like free resources out there. Like, like full control on Google is one of them. You can customize that for what you're trying to track, like income, expenses, savings goals. There's so many free things out there, right? If you use Google Sheets, You can do like sheets.new, tell it what you're trying to do and create a budget, enter your numbers. It'll show you like flow charts out the backside. And there's a lot
Yeah.
of free things out there, right?
Yeah. Just ask ChatGPT. But basically, if you're running a business, there are two financial forms that I believe you should have. In fact, I know you should have. One is a profit and loss statement. The second is a balance sheet.
Yeah,
If
which
you
you
have
can't do one without the other.
bingo, bingo, bingo.
I like how you did
All
that.
right.
Oh, you need two, but really you can't do one without the other.
You got to do one before you do the other. Okay. So establish an entity, understand your numbers. What would be the third thing?
Make a plan that's not an exit.
What do you mean by that?
So we touched on this a little bit earlier, but I don't like my business owners to have it where their retirement plan is selling their business,
Got you.
right? Because
Yeah.
that means like there's decades of time potentially that are absolutely lost to wealth building.
Yeah.
And
Yeah.
I don't want your business to be your exit. I want your business to use a tool that amplifies your exit, not be the exit.
I love that. I have friends that own service-based companies that are selling to hedge funds. Um, they're selling to big money, and big money's coming in and buying them up. And big money is buying. If you look at a business as an entity that produces future cash flows, which is basically what stock price is based on, uh, and you've ever played the game Monopoly, you understand. You understand that the winner of the game Monopoly is the person that's left with all of the income producing assets. So everyone else has to pay them. So business owners, especially if they started an HVAC company, they started a plumbing company, a roofing company, and they build it up, and they're going, "Wow, I've got a buddy in landscaping. He's like, I'm making so much money. Somebody wants to buy it out." And I say, there's a reason they want to buy you out. And they're offering you a discount on future cash flows. So they
Yep.
see potential. They see things that they can do. What if you just did those things anyway? What if you focused on your expenses? What if you grew your revenue? What if you streamlined? What if you replaced? What if you brought in some more people in other levels so you can go wider and deeper? Um, but that scarcity mindset of, well, I built it to here and they're offering me this much money. That's that's life-changing money. Yes, it is. But they're offering it because they know you'll take it
Yeah,
and they
because
want it.
it's money right now, and they know that they can put their plan in place and get it right.
And in 8 years from now, it's worth 3 times as much. So
Yeah, easy.
I
I
love it.
like
Let
that.
me ask you.
That's great advice, actually.
Thank you, brother.
Yeah.
Thought of it on my own. If somebody wanted to reach out to you, Jesse, have a conversation, how could they get a hold of you?
Uh, well, Google is an easy way. I'm there, but you can call us here. Our Reno phone number is 775-444-9335. You can also visit the website at Abshire, ABSHIRE family financial.com. If you're bored on a Saturday driving in your car at 3 p.m., you can tune to KKFT radio and listen to The Volatile Vet, which is a radio show I do every Saturday. That is about case planning and strategies that we've solved. We just did a big one on the new big, beautiful bill in air quotes,
Yeah.
and all the intricacies of that. That show is recorded and dropped on the podcast, also called The Volatile Vet, which is available on Amazon, Apple, Spotify, all those.
I love that. I love that. And I'm going to ask you one more question. I'm going to let you go. I apologize for taking so long.
No, you're good.
What's your golf handicap?
Right now, not as good
Yeah.
as it was last year. I think I'm probably playing at scratch right now, but that's because I don't have
Oh,
time to practice.
you poor thing. I'm so
Um,
sorry.
I just I played the Nevada State Championship for the statewide Veteran League at Arrow
Yeah.
Creek last week and sent it to a playoff.
Nice. Good for you.
So yeah, it'll be fun.
I love it.
If it's okay, you care if
Totally.
I drop a little tidbit in here at the end?
No,
There
please
was
do.
one thing that I scratched in my margin here. So some people, they don't use like wealth management or like portfolio managers and stuff like that because they're like, oh, well, I don't want to pay a fee. right? Would
Yep.
you agree that, like, like if I'm going to sell my house, do I really know how to do that? Like if I'm not that trained professional,
Right.
I don't know, right? So if I'm going to pay a percentage for a professional to really look after my stuff that has a team that has years of experience, that's what you're paying for. Right. So I like to put that out there because yeah, there's a fee associated with that, but you also get, decades of experience of people that do this every day and that's all that they do.
Right.
Like I
Right.
would
And
never
it,
buy and sell a house without a real estate agent ever.
well, yeah, and it's funny because we as a society tend to focus on minimizing expenses. We complain, I'm paying this much for this, I'm paying this much for that. I think the easiest way to combat that, and we on the real estate side, we do it with a net sheet, which is, hey, here's how much you're going to take from the transaction. So here's the sale price. Here are the costs. Now, could you do it yourself? Sure, you could put a sign in the yard. That's fine. You want
Yeah.
strangers knocking on your door all the time? That's fine too. It's you want to deal with a
Mhm.
buyer that falls out of escrow. Well, you've got everything on the moving truck. That's fine too. I
Oh
have
man, that
found.
would literally be the worst thing ever.
Oh,
You
it
got the
happens.
U-Haul like 80% full and it falls out as, oh my God, that would
Oh
be so
yeah,
bad.
yeah, they've moved out. Yeah, and the buyer all of a sudden ghosts. Yeah, I have learned that I invest in professionals that help me accomplish my goals. They get into in alignment with me. It provides comfort and safety. It's the same reason I have an alarm system on the house. I mean, I don't have to pay that extra fee. No, no big deal. But if somebody's breaking in, I'm going to wish I did. So
Right.
that's
Right.
no, a good
Right.
point. Good
Yeah.
point. It's an investment. It's not an expense. So it's just a reframing.
I completely agree. So, all right.
Oh,
Well,
brother. Well, I
thank you.
appreciate your time, man. Thank
Yeah,
you.
thank you for inviting me on the cast today. I appreciate it.
Oh, no, thank you for your service.
Absolutely. All right, Mike. Until next time.
Right on, brother. All
All right.
right. Peace out.
Later.